If you'd like to view or print any of the slides from today's video, click on the slides link sent in today's email.
Good afternoon. Here are the closing market comments for Friday, November 4th. Grains were relatively quiet and mixed today. The outside markets were also mixed, providing very little direction for the grains. Next week, the market will begin to focus a little bit more closely on the November USDA crop report. Production and stocks numbers will be watched closely, and these numbers may give the grain trade some fundamental news to trade on that's been lacking over the last few weeks. December corn finished the day 2 1/4 cents higher at $6.55 3/4. May corn up 3 3/4 at $6.73 1/4. November beans down 6 3/4 at $12.12 1/2. May soybeans down 6 cents, finishing at $12.39 1/4. Kansas City December wheat down 2 cents at $7.18, with Minneapolis December wheat up 6 3/4, finishing at $9.23 3/4. In the outside markets, mixed today. No big movers in the outside markets. Crude oil currently 22 cents per barrel higher at $94.29. The gold market down $8 an ounce at $1,757. The U.S. dollar index up 30 points at 77.16, with the stock market down 76, with the Dow trading at 11,968. Livestock markets saw some small gains today at the close, with December cattle finishing 15 cents higher at $124.65, and the December hog contract finishing 40 cents higher at 87 even. Taking a look at our weekly price summary for the week, December corn futures up 3/4 cents, virtually unchanged from a week ago. Corn and crude oil both finished the week just slightly higher, as those two continue to track very closely together. The weekly price range for corn was a 29-cent range from $6.31 to $6.60. Both of those came the same day when we had about a 30-cent range on Tuesday. November soybean futures for the week saw a loss of 5 cents. China rumors provided support, but it was South American weather, mostly favorable, keeping some pressure and preventing the soybean market from moving higher this week. The weekly trading range for soybeans was 43 cents from $11.80 to $12.23. December Kansas City wheat futures for the week lost 20 cents. Overall, supplies are adequate to meet demand, and export competition is stiff, keeping pressure on the wheat market this week. The weekly price range was just 28 cents from $7.11 to $7.39 in the December Kansas City contract. We've mentioned that corn and crude oil have been tracking fairly close together here over the last few weeks. I wanted to pull up something very interesting today. This is a 5-minute bar chart for both corn and a 5-minute bar chart for crude oil. Not only is corn following crude oil on a day-to-day basis, but if we look at the charts today, crude oil fell after the overnight session before we opened. Therefore, we opened sharply lower in the corn market following the weaker crude oil market prior to the morning's open. But what's also interesting is that corn hit its daily low at 9:40 in the morning, precisely the same time that crude oil hit its daily low 9:40 in the morning as well. So as we can see from this chart, that corn is not only tracking crude oil very closely day to day and week to week, but it's also tracking crude oil fairly closely within the day. This is not always going to be the case, but in situations like we've seen recently where fundamental news is pretty hard to find, traders in the grain pits looking for outside influences to move grain prices, and that influence has been the outside markets, and specifically crude oil here for the corn market. Taking a look at a news summary on this week's items, it's been a relatively quiet week. Prices have been very choppy, but within a narrow range. The EU debt crisis continues to be in the headlines on a daily basis, and there's still much uncertainty surrounding Greece and how they will handle the austerity measures that are being required in order for them to receive aid. Adequate supplies of soybeans and wheat on the world market, along with cheap Black Sea corn, are keeping U.S. exports below last year's pace, and again putting somewhat of a lid on grain prices at this time. China has shown a little bit more interest this week, both corn and soybeans. No announcements were made, but China's government purchasing group, Sinograin, has been looking for offers. Some believe that Chinese government may be interested in buying some U.S. corn and beans to replenish reserve stocks. As a reminder, the USDA will release its November crop report next week on Wednesday, November 9th. Taking a look at the December corn chart, no real progress was made in either direction this week. We traded a very choppy but also a very narrow range in the corn market, as that's been the case now for the last 2 to 3 weeks. From a chart perspective, we have overhead resistance around 660 to 665, with support coming in the 625 to 630 range, and at this time there's been no real fundamental news that's been significant enough to push the corn market out of this trading range. A similar situation on the technicals. Both the RSI chopping sideways for the last 3 weeks and the stochastics with no clear direction and in the middle of the range. Therefore, both the charts and the technical indicators at this time indicating a sideways choppy range until we can get some additional fundamental news to drive prices in one direction or the other. Traders will be watching the USDA November crop report next week on Wednesday very closely, as that could provide some fundamental news to push this market in one direction or the other. But for now, and heading into early next week, it continues to look like a sideways choppy range, waiting for news items to drive price direction. We do believe that relatively tight stocks on the U.S. balance sheet, combined with strong basis and tight farmer holding, are likely to allow corn prices to work higher over time. It won't necessarily happen overnight, but we do believe that any small piece of bullish fundamental news could push this market higher, testing initially the 665 level that was posted about 2 weeks ago, and then possibly moving into the upper $6 to around $7 price range as we move into the winter. Turning to the November soybean chart, beans also had a choppy week, and after testing prices below the $12 range for a few days, we're able to trade above and close above the $12 level, finishing at $12.12 in the November contract today. Soybeans on the charts have overhead resistance coming in around $12.30 to $12.35 on the charts, with current support coming in at this week's lows around $11.80. Our technical indicators for soybeans also chopping around somewhat in the middle of the range. We did see technical indicators trying to hook upward on the soybeans based on the strong performance yesterday, but both RSI and stochastics stuck in somewhat of a neutral range with no clear direction being indicated by the technicals, and again, no clear direction pointed from the chart perspective either. Therefore, we continue to expect choppy sideways trade until new fundamental input can come into the marketplace and drive prices outside of that range. But again, that fundamental news is not in place right now, so we continue to expect choppy sideways trade. Our longer-term opinion on soybeans really hasn't changed. We continue to expect somewhat of a sideways choppy trade as world supplies are adequate at this time. But given the tight S&D here in the United States, all it would take would be just a small weather scare in South America in order for these prices to rally back and challenge the previous highs from mid-October up at $12.75 as we move further into November and possibly into the month of December. Turning to the Kansas City December wheat chart, wheat continues to grind higher, being supported by the upward trending line from the lows posted back a month ago in early October. Over the last 3 days, the market has been testing that support, but has not made a clean break, and therefore, wheat's stuck in a trading range right now with support right about where we closed today in that 715 to 718 level, with overhead resistance at the highs posted 2 weeks ago around 746. Technical indicators for wheat are very similar to what we discussed in corn and beans. Both RSI and stochastics are stuck very near the middle of the range with no clear direction from those technical indicators. Therefore, we expect the choppy sideways action in wheat to continue here in the short term until new fundamental input can drive prices in one direction or the other. Our longer-term opinion on wheat is slightly friendly. We do believe that corn and soybeans will have an opportunity to see higher prices throughout the winter, especially if South America would have some weather issues. And if that is the case, wheat would be very quick to follow along with a higher move in corn and beans. So our overall bias in wheat is towards a choppy trade with an upward bias. This is Dan Cowger for Heartland Farm Partners. Thanks for joining us, and have a great weekend.